Lucid Group Inc. is currently trading at $6.27 per share, reflecting an intraday decrease of 1.88% as of 11:41 a.m. EDT on Friday, May 15, 2026. While most investors are fixated on the usual turbulence of the electric vehicle market, the real story here isn't the daily price fluctuation, but a massive structural shift in who is actually betting on this company's survival. For years, the narrative around Lucid was that it was essentially a sovereign wealth fund project, kept afloat almost exclusively by Saudi Arabia's public investment fund. But the recent entrance of Uber as a major stakeholder, now holding an 11.5% stake, has completely flipped the script. This isn't just another injection of capital, it is a fundamental pivot from being a luxury car manufacturer for the elite to becoming a primary hardware provider for the future of global ride-hailing and autonomous fleets. The expectation in the market right now is that Lucid is still a struggling startup bleeding cash, unable to find its footing against the massive production scale of a company like Tesla. The reality is that Lucid is successfully diversifying its revenue streams through high-level technology partnerships that go far beyond just selling individual cars to wealthy consumers. While many retail traders are using the Fidelity mobile app or checking their Robinhood investments to see if the stock will hit double digits again, the institutional players are looking at the 35,000 vehicle commitment from Uber. This deal suggests that Lucid's high-efficiency powertrain technology is being recognized as the gold standard for high-utilization fleets, where every mile of range and every minute of charging counts. If you are managing your own individual brokerage account or using the Interactive Brokers platform, you've likely noticed that the volatility in Lucid remains intense. The stock recently saw a significant jump after news of upbeat EV demand, but it is currently consolidating. The common ground among investors is the belief that Lucid has the best tech, but the worst timing. However, the contrarian view is that their timing is actually perfect for the next phase of the industry. By moving into the robotaxi space via their partnership with Uber, they are bypassing the saturation of the luxury sedan market. They are positioning the Lucid Gravity and the Air as the backbone of a premium autonomous service. This is a massive leap from the original business model of just competing with the Model S or the Porsche Taycan. Recent trading volumes on the Interactive Brokers trading desk show that institutional activity is picking up, especially following the Q1 2026 earnings report. While Lucid missed on some revenue targets, the long-term guidance is what's keeping the bulls engaged. The expansion of their factory in Arizona and the ramp-up of the Gravity SUV production are the primary catalysts investors are watching. If you use self-investing tools or frequent investing sites to track sector momentum, you know that the macro environment remains high pressure. Interest rates and consumer spending are still weighing on luxury purchases, which is why the shift toward commercial partnerships is so critical. The company is essentially building a safety net that doesn't rely solely on the whims of a high-end retail buyer. Looking at the technicals, the intraday movement today shows a bit of profit-taking after the recent 8% surge. For those who trade via the Robinhood app or maintain a Fidelity brokerage account, the key level to watch is how the stock holds up around the $6 mark. If it stays above the support, it confirms that the market is beginning to value the Uber deal and the PIS continued backing as a floor for the stock's valuation. It's a classic case of expectation versus reality. The expectation was that Lucid might run out of cash by late 2025. The reality is they just closed a $1.05 billion capital raise that includes registered public offerings and direct investments. They aren't just surviving, they are fueling up for a long-distance run that most people didn't think they had the stamina for. Now is the time for you to weigh in on this specific sector. Comment below how many shares of Lucid Group Inc. you currently hold, or let me know if you think the Uber partnership is enough to actually turn this company profitable by 2027. The business model for Lucid has always been about doing more with less, and that philosophy is finally meeting a practical application. Their powertrain tech, which they also supply to Aston Martin, is significantly more efficient than what many of their competitors offer. This efficiency is why companies like Uber are willing to put up $500 million for a double-digit stake. In the world of online investing, people often look for the next big thing, but often the best opportunities are the ones that have already survived their darkest hour. Lucid has been through the ringer, SPAC mergers, production delays, and massive executive turnover. But now, with a new leadership structure under the current CEO and a clear path toward robotaxi integration, the company looks more like a technology provider that happens to make cars, rather than just another car company. If you're looking for investment help through a SoFi robo-advisor or building out a diverse portfolio with Fidelity ETFs and Fidelity mutual funds, understanding the risk-reward profile of Lucid is essential. It remains a high-risk play, but the risk is no longer just will they go bankrupt, it is now how quickly can they scale. The reality of their production output, which sat around 9,000 vehicles in 2024, is that it must grow exponentially to justify a higher market cap. However, the 35,000 vehicle order from Uber provides a guaranteed pipeline that most other EV startups simply do not have. This creates a massive amount of tension in the stock price as short sellers bet against the execution, while long-term holders bet on the technology. For those who use the Robinhood trading platform or keep a close eye on their SoFi active investing account, the daily swings are just noise compared to the institutional shifts. The public investment fund still owns the majority of the company, which provides a level of geopolitical and financial backing that is almost unheard of in the private sector. This allows Lucid to invest heavily in things like on-site solar power at their factories and long-term sustainability projects that might not show immediate returns but strengthen their resilience. When you analyze the individual brokerage data, you see that the smart money is staying put, waiting for the Gravity SUV to reach full production capacity. The Gravity was recently named the 2026 World Luxury Car of the Year, which validates the product, but the market is waiting for the numbers to validate the business. When we talk about online investing, we often focus on the flashy headlines, but the real work is happening in the engineering labs in Newark and the factory floors in Arizona. Lucid's ability to offer a lease on the Air Pure for around $729 a month, or the Gravity for $799, shows they are trying to reach a slightly broader audience without sacrificing their premium branding. This pricing strategy is a direct response to the reality of the competitive landscape. They can't just be the most expensive, they have to be the best value in the luxury segment. This is why their engineering focus on battery range is their most potent weapon. If they can provide 400 or 500 miles of range while others struggle to hit 300, they own the high-performance narrative. As we look toward the final months of 2026, the catalysts for Lucid are very specific. We are looking for updates on the robotaxi steering and braking systems they are developing for the Uber fleet. We are watching for the first full quarter of Gravity deliveries to see if the margins are improving. And we are monitoring the overall appetite for EV stocks on platforms like Interactive Brokers and Robinhood. The gap between expectation and reality is where the profit lives. The expectation is a slow, painful crawl to profitability. The reality could be a rapid ascent driven by a global shift toward autonomous, high-efficiency transport. To summarize, Lucid Group Inc. is currently in a state of profound transformation. The intraday price of $6.27 reflects a temporary dip, but the underlying narrative has been fortified by massive institutional backing and a shift toward commercial technology supply. By establishing common ground with the current luxury market while simultaneously challenging it through a massive robotaxi pivot, Lucid is forcing the market to reevaluate what an EV company can be. The tension between its past as a struggling startup and its future as a core technology provider for global fleets is what will drive the stock for the next year. Whether you are using Schwab Intelligent Portfolios to manage your wealth or taking a more hands-on approach with Interactive Brokers fees and account management, Lucid is a name that demands a deeper look. The authority in this space doesn't come from following the crowd. It comes from seeing the reality of the technology before the rest of the market catches up. The transition from a pure-play automaker to a tech-heavy mobility partner is the most significant development in Lucid's history. Investors who are checking their Fidelity IRAs or monitoring their SoFi ETFs should recognize that the company's valuation is no longer tethered solely to how many sedans they can deliver to a zip code in California. It is now about their role in a global infrastructure. The reality of the 11.5% Uber stake is a signal to the entire market that Lucid's intellectual property is its most valuable asset. While the road ahead is still full of macroeconomic challenges and sector-wide pressures, the structural foundation of the company is stronger now than it was during the peak of the EV hype. The depth of their partnership with the PIF and now Uber creates a unique position in the market that few, if any, of their competitors can match. As the market continues to fluctuate, the focus should remain on these core catalysts. The upcoming investor days and the next quarterly reports will be the true tests of this new direction. If the execution matches the ambition, the reality of Lucid's growth will far exceed the current market expectations. This is the storytelling of the market, a constant back and forth between what people fear and what the data actually shows. For now, the data shows a company that is heavily capitalized, technologically superior, and finally finding the right partners to scale its vision. Whether you are an active trader or a long-term investor, the story of Lucid is far from over. It is simply entering its most professional and high-stakes phase yet. The authority of their engineering is no longer in question. Now it's all about the authority of their market presence. Keeping a close eye on the daily movements while maintaining a clear view of the long-term horizon is the only way to navigate a stock as dynamic and potentially rewarding as this one. Lucid isn't just another ticker. It is a case study in how luxury tech can find a massive practical home in the future of transport. Keep your eyes on the support levels, stay informed through your preferred trading platforms, and remember that the reality of a company is often hidden behind the noise of daily price action. Lucid is building something for the long haul, and the market is finally starting to take notice.
If you're managing an individual brokerage account or using the Fidelity mobile app to stay connected to the markets, keep Lucid on your radar. The shift in ownership and the expansion of their vehicle commitment to Uber are the kinds of moves that define the next decade of a company's life. The story here is just beginning to get interesting, and those who look past the surface will be the ones who truly understand where this is going. Stay sharp, stay informed, and always look for the reality behind the narrative. Disclaimer: this video is for educational purposes only, not financial advice. Please do your own research before investing. Market involves risk. Like this video, comment your thoughts, unshare with your friends, subscribe for more updates.